The views expressed are solely those of the individuals providing them and do not reflect the opinions of the Team Sock Passe podcast or their respective affiliates or sponsors.
Sock Passe, what's up, y'all? Welcome to another episode of the Team Sock Passe podcast. My name is Glad.
And I'm your favorite boy, Rob. We are your favorite Team Sock Passe podcast show where we interview great entrepreneurs from all sectors of industry. Remember, subscribe, share, comment below. You subscribe, you share, you comment, speak to your friends about us. Glad, introduce today's guest.
This is our brother right here. So
Yes,
we
sir.
met a couple of years ago at a conference in Philadelphia. Yep. And he's been our brother ever since. Mm-hmm. Mr. Andre Green, also known as Andre Talks Green. What's up, my brother?
Good
Round of applause. We got a live audience.
Thank you.
Don't leave me hanging.
Oh, my fault.
What's going on, man?
Man, I'm good.
How's everything?
Good to see you
Everything's
again.
good, man. Good to see y'all again, as always.
Yeah.
Episode 50 you did with us.
Yes.
You surprised us with the 5-0 balloons.
Yeah,
That was beautiful.
That's a big milestone.
That
for
was a
y'all.
big
That was.
milestone. We're in between 50 and 100.
Okay.
We're almost there. But you're back with us to talk about an amazing topic. Again, insurance, but how to invest in real estate using life insurance.
Yes,
So we're
yes.
going to get into it. How you been?
I'm
Talk to the
good,
people, man.
I'm good, man. I've been, as everybody knows me as the insurance person, right? But a little backstory on me. I've been in real estate for a little over 20 years at this point, right? So insurance is my second career, right? So what I learned first and foremost was how to use real estate to build wealth. Right, and I tell everyone I've had almost all of the jobs in real estate that there is, and along the journey, I've learned a lot of things. I've utilized that information now for myself, right? I'm similar to Storm, where I don't really tell people to just go be an entrepreneur. I don't necessarily believe that. I would have probably still had a job to this day if they didn't put me on early vacation. That's what I call it when they fired me. So I was working. I was making money at my job. I mean, it was close to 6 figures, and I was buying investment properties, and that's what got me going. But I used all of the knowledge from all of the jobs, put it all together, and that's actually how I ended up with the book. It was me using all of the bits and pieces from all of the years and from all of the mentors and everybody else that sort of told me this and showed me that, and then I apply it to my own personal life because we are our own economy, right? We can talk about the politics if you want to, but once you understand and control what's going on in your life, everything else around you is secondary. Mm-hmm. So that's the goal. How do you can take control of what's going on in your life, in your business, in your economy, and then sort of expand it and help others and teach others. And, everyone has their own dream of what their life looks like. This is just a tool to help you get there.
What was your 9 to 5? What was your job back in the day?
The first one?
Yeah. Share with us.
The first one, I was working at a Boys and Girls Club.
Okay.
Yeah, I was a camp counselor after school. We did that during the school year, and in the summertime it was full time. What's that program called that we got here in New York?
What's
it called?
In New York?
Summer youth.
Okay.
So I did that for like 2 years
Okay.
at Boys and Girls Club over there in Richmond Hill. I'm born and raised in Queens.
Mm-hmm. Okay.
So we was doing that for like 2 years. Summer youth program. I was a member, and then I became a camp counselor there, and then somewhere in that process, this is a very fun story, I went and asked my parents, I'm like, oh, I want a pair of Jordans. Mm-hmm. And I have Caribbean parents that are from Jamaica. Mm-hmm. And I went to my mom.
I know where this story goes.
I went to my mom, like, Mom, I want to get, it was Jordan 4's, the cookies, the cookies and cream. Those are the first pair that when I saw them, I'm like, oh, I want those. Mm-hmm. So I went and told her, Mom, I want these sneakers. She's like, all right, let's go tell your dad and we'll go to the store. Mm-hmm. So we went to the store with my parents to go buy the sneakers, went to Foot Locker. Mm-hmm. And my dad's like, which one is it? Because he don't know what's going on. My man goes to work, comes home, whatever his kids want, he's going to do it. We went to the store, and he picked up the sneakers. They went and brought out my size. I put on my feet. Yeah, they fit good. He did a little toe check where he touched. You got enough space in that thing? I'm like, yep. He saw the price. He was like, whoa, what? He's like, I'm not paying for this. Right. And then he's like, listen to me. I'm going to pay for these sneakers, but I'm not buying you no more. So these sneakers got to last you for the rest of your life. And that was the beginning of, if you want things for yourself, you got to figure out a way to go get them, right? And as we have Caribbean parents, that does not include anything from the street. So
Right.
you got to get a job, right? So that was what I ended up started doing. Summer youth was cool, but then I got a job when I started in high school. I think I was a sophomore. I started working at a supermarket, right, as a cashier. I was doing that for about a year or so. And then, I mean, it's something to do, right? You leave school, and then I joined some teams, so I couldn't go to work. So now I'm on the basketball team at school. And I graduated high school. I went to Jamaica High School, graduated high school, and I started undergrad at St. John's University. And when I got into school, it was the first time I really had a bunch of free time, right? So as for anyone who's gone to college, that transition from high school to college is you're on a schedule every day from 7:30 a.m. to about 4. And if you're on a team, it's about 7 because you got practice and all that stuff.
Right.
I got to college, I wasn't on a team, and I was just in school. And my classes were all set up. Class started at 7 a.m., and I was done by 11 a.m. I'm like, oh, this is great. So I'm just hanging out at school. And I did that for about 5-6 months. Then I realized I ran out of money. And I can't use credit cards to live off everything. Right. So I ended up, life is amazing because I've had really good mentors along the way. And I think that's the part of the education and the coaching piece that resonates so much with me, is that without having the right person give me a little bit of advice or a lot of advice, with the right intention is what sort of changed things for me. Because I was volunteering at a non-for-profit. I forgot the name of the program right now, but the lady that ran a non-for-profit, she pretty much helped high school students get their GEDs that dropped out of high school for whatever reason. You had a baby, you got arrested, you left school, whatever it was. So she helped them get their GEDs so that they can go get higher education, go get a job, do all the things you need with a high school diploma. And I was helping her for probably like 6-7 months. I'm like, I like helping you, and this is great, but this pays nothing. Like, I'm just doing it for free. So I'm like, I need to make some money. What can I do? She's like, I don't know. I run a nonprofit. Like, I'm not over here trying to make money. I'm just trying to help people. Right. But she's like, talk to this lady. The lady's name was Barbara. It was a family friend of hers. And the lady, Barbara, was a retired timeshare salesperson. She was like, a manager for like one of the huge companies. Barbara could sell you anything. She was that good. So, but she used to live in Hawaii for like 10, 15 years, and then she was from Queens, so she came back home, and she retired. She was in her, at this point, she's probably in her mid-50s. And she's like, yeah, I have a real estate brokerage, and I do rentals. I don't really sell anybody homes, but I do rentals because the timeshare business was really very, very good to me. I'm not really worried about money. I just need something to do. Right. She's a very social person, so she likes to be out in groups and communities. So she taught me the basics of sales in terms of apartment rentals, Section 8 rentals. How do you find a lead? How do you find a client? How do you then service that client? And that led me down to a rabbit hole of, real estate's kind of cool. And I knew about it because we all know about real estate in general, but I didn't know what that actually meant. So working with her, I was making a little bit of money, but I was dealing with Section 8 tenants. And my first experience with Section 8 tenants was, you guys want champagne wishes to carry our dreams, but y'all got bare money. It doesn't add up, right? I can't get you a 3-bedroom, 1-bathroom on $200. That doesn't work. Right. Like, how is it supposed to happen? Oh, well, that's what I want. And then I learned that people have their own expectation of the things that they want and what they're gonna get. Right. So I went back to Barbara one day, and I'm like, Barbara, this is probably like almost a year in. I'm like, I can't do this no more. And she started laughing. She's laughing so hard, like it was like a really funny joke. I'm like, what is so funny? Like, I can't work for you anymore because I'm barely making any money, and these people are stressing me out. I was driving people around in my car. I'm like, I can't do this no more. And she's like, when she finished laughing, she said to me, it took you long enough. She was waiting for this conversation. Oh, wow. I'm like, what do you mean it took me long enough? She's like, you have to do things in life to know what you don't want to do. That was like my first lesson. Like life lesson. She was teaching me other stuff, but that was like the first life lesson. And I'm like, well, what else can I do in real estate? She's like, oh, you can do lots of things. I'm like, do they involve Section 8? She's like, if you want them to. Well, what else can I do? Then she rattled off like a list of things. You can be an appraiser, you can be a loan officer, you can work for a bank, you can be a real estate agent, you can do title, you can have underwriting, you can do so many different things in real estate. That was the first time I realized that real estate wasn't just like one thing. I always thought real estate, realtor. You can be an investor, all of those things. And I'm like, oh, how's a loan officer thing work? She's like, well, you got to work for either a mortgage, a bank or a mortgage broker. And then they're the ones that help you get the loan. And then they're the person that helps a buyer buy the property. I'm like, cool, I want to do that. She's like, great, go figure it out. I'm like, You just told me what to do. No, I told you what the jobs were. You got to go find a job. You got to go find a mortgage broker or a bank and work for them as a loan officer. That was my second life lesson. Nobody's going to do it for you. So you got to go figure it out on your own and make the things happen that you want to happen. And that was the beginning of the journey for me. So from there, I did find a loan officer job working for U.S. Capital. One of the owners is still my mentor today. His name is Pete. I met him at the barbershop.
Okay.
Yeah,
Okay.
so the barbershop we spoke about, I met him at the barbershop. So him and the barber are cousins.
Okay.
That was how I met him.
Okay.
And the first time I saw Pete, I mean, he's well ahead of me in terms of age, but a very successful guy. I mean, he came up through the ranks, did very well for himself. So the first time I saw him, he pulled to the barbershop in the 5 Series. The old school blue joint with the tan seats, the square one. The first time I saw him.
Classic.
I was like, oh, he got some money. Okay. Let me figure out what he knows how to do.
Right.
Second time I saw him, he had a Range Rover. This is like the same month or so.
Okay.
And I'm like, oh, he got a Range Rover and a 5 Series? Oh, he got to be rich. So I told the barber, I'm like, yo, can you just like introduce me to your cousin? Like, what's he do? I think he do mortgages or something. I don't know. I'm over here cutting hair. I don't care about what he does. So I'm like, yo, can you just like give me an intro? He's like, no, I look like to you, Oprah. If you want to go talk to him, you go talk to him. I'm like, all right, this is a theme in my life, right? Nobody's going to do the introduction part for you. You got to do it yourself, right? You got to open your mouth, you got to talk. So I talked to Pete. I called him outside. He's always on the phone. And many people tell me now I'm always on the phone. So I interrupted on one of his phone calls, and we started talking. And he's like, what do you do? I'm like, I'm in college. He's like, where you go to school? I go to St. John's. He's like, all right. I went first my phone call, I come inside. He came inside, we talked a little bit. He's like, if you're looking for a job, come down to my office on like Wednesday and we'll talk. In my mind, I heard I got a job interview. So what do you do for a job interview? You go prepared for a job interview.
Right.
So I left school, went home, put on my little suit and tie, got my resumes printed out, and I went to his office. And I'm sitting there in the waiting room. He comes out, and when he walked out the door, I saw him in his face. He's like, you know how you see somebody, like, you're confused as to why the person is there, dressed how they're dressed?
Right.
Like, where you going?
Right.
I was like, you told me to come here on Wednesday. He's like, yeah, but why you got on like a suit and tie? Like, what are you doing? Mind you, he had a suit and tie on. So it wasn't like he was foreign what I was wearing. He was like, why are you wearing it right now? I was like, I thought this was a job interview. He's like, no, I just wanted to talk to you. But since you want a job interview, give me 5 minutes.
Wow.
So then he went and got his underwriter and another owner of the company, and they set up the conference room for a job interview. And I had a job interview on the spot.
Wow.
That turned into a 7-year working relationship with him, and I learned everything about finance from him. Like how money actually works, I learned it from him.
Okay.
And that was like the real foundation of everything else I did after that came from that man and that situation.
So to take it back to, and how old were you then?
Oh, I was 19.
19.
Yeah.
Okay.
I was 19.
So to take it back, like growing up in Queens, we know the neighborhoods, we know how it is, the influencers, and either you're a basketball player, or a drug dealer.
That's
a drug
it.
dealer.
That's it. That's all we really know, right?
Yeah.
That's who has the money.
Absolutely.
Yeah.
So, in your mindset, like, did your parents say, like, what were you studying? Like, what did you want to become?
I mean, I'm going to age myself a little bit here. So I started college in 2002. So right after the Y2K, right? It's computers. Computers is the only thing that's really going to make a bunch of money. So I went into school to be a telecommunications major, which all that means is that I would have had the perfect degree to work at Verizon and do programming for either the phone systems or computers. We do actual coding and programming and a lot of management type of stuff, right? So that's what we were taught at school. I was in my junior year at St. John's. So this is after I got the job working at with Pete, and I'm at school, and I'm like, it was first year or two of school is you doing the general classes, so all the regular stuff. I got into my junior year we're doing programming classes. I'm like, yo, I hate this. I can't do this for the rest of my life because you're behind a computer all day. I'm not talking to nobody. You just programming stuff and see if it works. I'm like, there's no way I can do this. But I really was interested in business at that point in time because I was working with a mortgage company. So we're doing a lot of moving pieces to make the deals work. I'm like, I like business. I went to my advisor first semester junior year. I'm like, I want to switch my major. She's like, okay, no problem. What you want to do? I want to go into the business school at St. John's. She's like, all right, no problem. Let me pull up your transcript and see where you're at and all that stuff. All right. She's like, yeah. All right, we can transfer you over. You just got to drop a couple classes right now and pick up these classes. I'm like, cool. She's like, yeah, you'll be good. So I'm supposed to graduate 2006. She says, but with the switches and stuff, you graduate 2007. I was like, whoa, what are you talking about? She's like, because you didn't take all of the prerequisites already. We got to get you in the prerequisites and then take the rest of the classes to finish. That's another year of school for you.
Right.
I was like, no, that sounds like jail. I got to get out of here in 2000. I got to get out of here in 4 years.
Right.
Right? Because by this point in time, I understood what higher education really was. It's a business. They set you up to be in there for 4.5, 5 years when you start undergrad. So the longer you're in schools, the more you pay in tuition. I'm not here for this. I got to get out. So I'm like, I'm not doing that. So what else can I do? She's like, well, I can double major you. You do a minor in business and finish on time. I'm like, let's do that. Anything else you need to know? She's like, you probably got to do a couple of summer classes to get out of here on time. I'll do that too. That's what I did. Graduated in 4 years, got out on time. But when I got out, I knew I did not want to do anything with computers or telecommunications. I was heavily into the finance portion of just doing the mortgages. And I started with Pete 2004-ish, 4 or 5. The real estate industry, as you guys know, back then was crazy.
Yeah.
You're making outrageous amounts of money giving out loans because if you could fog a mirror, you can get money from the bank.
Right.
So it was super easy to make money back then. And I was like, I made the right decision. This is what I should have been doing the whole time. I don't know why we went to college. This is dumb. 2008 happens.
Yeah, that was.
I am 22-ish. I'm like, what the hell is going on? Money slowed up, and for us in the industry, in the mortgage industry, we realized all that stuff in 2007. So things got slow in 7, and the news got it 2008. Everybody else felt it in 2008. But I'm like, I don't know what I'm gonna do. Like, I'm not making any money. And this is a behavioral conversation, which we can definitely get into. When you start living your life a certain way, you start spending money a certain way, whatever it was that was feeding the money, the income, if that stops, your habits don't stop when the money stops. You're spending money like you're still making money because in your mind, I made the money, I can make more money. But when everything dries up, you're still spending money like you about to get a check for $25,000 next week. And at 22, that's a hard concept to understand. And no one around you is really giving you that advice because they haven't done those things, right? They haven't experienced that. So that was a huge transition in my life for me when it comes to how I behave with money and how I learned to manage and deal with money. But yeah, 2008 happened. I had to begrudgingly leave the mortgage industry, and I went into property management. I'm not even sure if I answered your question.
No, yeah, you did. No, you're good. He's flowing. He's flowing.
You're taking us on memory lane. This is amazing.
This is good.
Yeah,
this is good.
It's the journey.
I mean, because you talk about the mindset of an individual, because we've had a lot of people here on this platform talk about real estate and investing and all kinds of stuff. So the background is interesting because all of us here, we don't, we all have a journey. We all have our different history. So there are certain times when it's like, I never thought I was going to be a real estate investor, but it just rolled on my lap. It just rolled out. It's like, okay, so now you become a millionaire, and you're like, wow, my background had nothing to do, my school, my education had nothing to do with real estate.
Yeah.
Right.
So it's definitely interesting.
Yeah.
When you, after 2008, how did you transition into insurance?
I didn't.
So
2008.
what was after that?
Yeah, so my first interaction with insurance happened in 2008, but it wasn't by my choice. So after I left the mortgage industry, I went and got a job at a bank. And that was because it was, for anyone that's coming from like a finance space, it's the safest job you can probably get. Because a lot of the banks, 2008, 2009, they all took a bath with what was going on the mortgage side. So you can get a job working in a retail function at a bank. So as a branch manager or business relationship manager, that's the people that open your accounts for you, or as a teller. I had actually already worked at a bank when I was in college before I started working with Pete and everybody else. So I was a teller for like a year and some change.
How many jobs you had?
I'm Jamaican, bro. We got a lot of jobs.
You really had that Jamaican. Damn. Okay.
We got a lot of jobs. Listen,
Jeez. Well, shout out to your parents, bro. 'Cause
that's a cultural thing. If there's one thing that Caribbean folks gonna do, they gonna work.
They gonna work.
We gonna make some money.
Yeah,
what we do with is a whole other
Yeah,
conversation.
yeah.
But
Exactly.
we gonna make some money. So
Yeah.
now I was working. I had worked at a bank before, but 2008 I went back to the bank, a different bank. I went and I got a job at the bank, and I was there as a placeholder because I didn't know what I was doing. But I had, just to give you some context, 2006 May. I graduate from college, graduate St. John's, graduation. June 2006, my son's born. 2 years goes by, it's 6 and a 7, 7 and an 8. The economy's a mess, money's all over the place. I got a 2-year-old. He's going on 2 years old in 2008. I have a family that I'm responsible for. So I'm like, I gotta get a job. Like, I can't keep trying to figure it out. I have to just go work. I don't want to do it, but it is what it is.
Right.
So that's how I ended up with the job, because I had to make sure I had money to provide for my son. So 2008, I get the job. I'm working at the bank, and what's really odd, and I still don't know why I didn't do it, there was a program at the bank that would allow you, it's like they fast track you to be a bank manager. And I didn't want to take that. In my mind was, if I do something that's too serious at the bank, it's going to take up too much time for me still trying to figure out how to do deals on the side. Because I really enjoyed doing the real estate stuff. And because I was in it for so long, I built up a really good base knowledge of how to do a loan and put deals together. But then I also got licensed as a realtor, because I almost got burnt on a deal, which I could tell you guys about. So I knew a lot of investors. I knew people fixing and flipping properties. I knew all of the pieces. So I'm like, I still want to do that on the side. I'm not going to stop doing that. But I don't want to work as a branch manager, because in my mind, you're really responsible for a lot of things. I don't want that responsibility. I just need to come here, get my check, pay my bills, and go make some more money somewhere else.
Right.
And that was why I never got into the program. And at the time, I mean, I'm going to just give y'all the numbers, right? Working as a branch manager, finish the program out the gate, you're making $75,000 at 23.
Wow.
Being a personal banker, you're making $29,000 a year. That's the numbers that are in front of me. I'm like, I still don't want to do it.
Jeez.
I wasn't chasing the money.
Got you.
Right? So
You
it's
were
like
chasing your passion in a sense.
the passion I didn't even know was my passion, right? It was just like, I knew I had more upside if I just, context. I was doing mortgages for 5 years before I got to the bank. So on a bad month, we probably don't make no money, right? $1,000, $1,500. On a really good month, 50, 60 grand hits my bank account. I'm 20, 21. So I go get a job paying me half of what I did in 1 month at another job. And I'm like, this is wild. It's super humbling. Because in my mind, 2007, 2006, this is never going to end. I'm going to do this until I'm 95 years old, baby. We're making money.
Right.
And it was super humbling to have to stop and now and go get a job and like figure out, well, how do I finance and budget on these numbers? But that was the journey. So I didn't go and take the fast track to be a bank manager, which would have made me tons of money over the years. And I just started learning my job at work. So as a personal banker at a bank, your whole job is to open bank accounts. So checking accounts or annuities or whatever it is. A part of the requirements for the bank that I worked at, though, was if you're going to be a personal banker, you've got 6 months to take your life and health insurance exam. You have to have it to be at the desk. So you got 6 months to take the test, and if you don't get it within that first 6 months, you got 6 months before you get fired. So there's 1 year you have to get licensed. I'm like, whatever. They gave us the training. I did the training. I got my license to do life insurance so I could sell annuity products to customers. And that was my first introduction to insurance, was through the bank.
Got it.
Yeah.
Powerful stuff. And then how long did you do that for with the bank?
So I was at the bank in the physical branch for 10 months.
Got it.
Because I hated it.
Right.
Because you felt stuck.
I didn't even feel stuck. I just hated opening bank accounts because they're forcing. Remember that whole Wells Fargo thing a few years back?
Yes.
Where they got fined and they were just fraudulently opening accounts for people?
Yes.
There was a quota to
There's
open
a quota
right.
every month, right? And they don't care how the accounts get open, what you're telling people, what you're opening them for. Did you open these number of accounts every month? And I never went down a rabbit hole to figure out why that's such a big deal. I wasn't with it. I was meeting my quotas. I was doing what I had to do. But I'm like, this is not helpful. I'm opening accounts for no reason. So I was 10 months. I started January of 2008, and by October of 2008, I was out of the physical branch. So along the way, I was like, I hate this job. I'm gonna just leave and go somewhere else. So at this point, I got a 2-year-old. What's safe? I'm gonna be a cop, or I'm gonna take the fire department test, or I'm gonna work for sanitation, or I'm gonna work for MTA.
Damn.
Wow.
That's what I'm gonna do. It's not about what I want to do. I got somebody I'm responsible for, so I got to go figure out what's the safe thing to do for that person. So I went and took the NYPD exam. Sanitation wasn't up. MTA, I didn't know this. You had to take a test to apply for that job. And the fire department, I second thought that one. I'm like, I don't want to run no fire. If there's a fire going, I'm not doing that. So I ended up not doing that one. So NYPD happened, let's say it was July, August. And the job that I ended up taking was to work as a property management analyst inside the bank. So back office, I'll be corporate at this point.
Okay.
That job got posted, let's say, the last week of September. But I had already done all the applications for everything else because I didn't know. I didn't even, in my mind, the entire bank was in that one location I worked at. I never thought about back office. So I saw it pop up on our, internal feed or whatever. I'm like, oh, that looks kind of interesting. It's in real estate. I like real estate. So I went and applied for the job. Had my interview. No, I applied for the job, had an interview, and they're like, we'll get back to you because multiple people applied for the position. I'm like, yeah, no big deal. I knew in my mind I'm leaving. So let's say this was like a Wednesday. I had my NYPD psych exam that same Friday, that same week. So I did the psych exam, and then the Monday I get 2 phone calls. I got a phone call from NYPD to come back and do my next round of exams, and I got a call from the HR person at my job, and they said that they want to offer me the job for the property management analyst. I'm like, all right, cool. What's the salary? NYPD at the time was paying $45,000 a year, plus their incremental increases over the next 5 years. The bank job was paying $34,000. I'm like, this is...
You can't win with this bank stuff.
This bank thing makes no sense. I'm like, this is kind of like a no-brainer.
Right.
Then I'm like, wait, what am I really doing at NYPD? I'm like, I might get shot at work? I thought about it for like 2 days. I'm like, I like the real estate. And if nothing else, I'm going to learn some stuff at the bank. I'm already used to the schedule because, the cop schedules are all over the place. And it's safe. Like, it's safer than being a cop.
Right.
Right? Physically.
Right.
I took the job at the bank.
Okay.
So I left the branch and went to the back office. And the funny story about the back office job was the guy who interviewed me, his name is Don. God puts people in your life at the right time for the right reasons. Don was late 60s, early 70s when I met him. And he was a person that worked in banking since he was in his 20s.
Wow.
Doing exactly what he's doing right now. He's always been in some type of facilities or property management role for banks. So EAB, Citibank, all of the big banks. He's worked for them. And when I came into my interview, he's reading my resume. He's like, oh, you work at the branch? Okay. He's like, you don't know how to do none of the stuff we're about to tell you to do. I was like, I don't. But I can learn really fast. And I have this foundation. But I really, really like real estate. So I'm going to absorb everything that I can figure out from this job because I want to know it. I'm not just here to just work.
Okay.
He's like, all right. So when I got the job, the first day back in his office, I'm like, why'd you hire me? He's like, because you want to learn. Not because you don't know anything. You don't know nothing I need you to do right now. You know nothing. But you want to learn.
Right.
That's all I needed to know from you. So I worked with Don for 5 years. Until the bank did restructuring and he got fired.
Wow.
And I was like, lesson. Don's been in banking for, at this point, 50 years. And my job restructured because they wanted to sell the bank to another bank. Got to get rid of all of the heavy salaries, which is always at the top. So they restructured, fired him, gave most of his job responsibilities to the person that was senior to me in my position. And she was doing a bunch of work that he used to do. They fired somebody else, so she's doing a bunch of that work too. I got some work that she used to do. It's a bunch of restructuring. But in the lesson I learned was, this is not job security.
Right.
Like you've been working in this industry for 50 years, and at 70, what you gonna go do right now? I mean, financially, he's probably well set off. He's perfectly good. But it was the lesson for me in my, I was probably early 30s at this point. Like, I can't bank on this.
Right.
But I also don't know everything I'm supposed to know yet. So what do I do from here? So I'm like, well, what's the next progression, right? I figured out, I learned a lot about commercial real estate, commercial property management, which is totally different than apartment residential property management. So I'm like, let me find a job doing apartment property management. That was 2011 when they did the restructuring. He got fired. I didn't find a job till 2013.
Wow.
2 years. 2 years of me sending out resumes and trying to figure it out and get into that job.
You should have kept the NYPD.
I mean, at that point, and that's what I honestly didn't even think that then, because throughout the time I was always working on the side, right? I'm Jamaican. I got to hustle. When my regular job wasn't paying all of my bills, I got a lot of credit card debt. I had a lot of things going on. I was doing deals. I'd sell a house here and there. I'd wholesale a deal here and there. So I'm always making money along the way to keep me afloat and get me out of the hole that I put myself in by not making that decision earlier, right? I should have went and got a job as soon as in 2007 when things slowed up. But we're being hopeful. We're being positive. We can figure it out. Life don't always work that way, right? So I dug myself out the hole. So yeah, 2013, I finally get a job in property management, making way more money, and doing that for like a year and some change before I realized that I don't know if this working thing is really my thing.
And then, so is that how you jumped into real estate? I mean, life insurance, kind of like, because when we met you in Philly, we met you as a life insurance expert.
Yeah.
So, all of this background information you give me is awesome because we didn't know that you had all of this knowledge and passion for real estate, which kind of ties into the topic today.
Yeah.
But talk to us a little bit more about the basics of life insurance, right? Because we spoke about it on episode 50. Term, whole life, the reason why everybody needs life insurance. Talk a little bit about that.
Sure. So I'm going to fast track a couple of years. I didn't get into insurance until 2019. Again, the first time I touched it was 2008. The second time was 2019.
Okay.
Now, what got me into insurance was real estate. And it's like kind of weird. Like, how did that happen? So I got licensed as a real estate broker. So I was able to sell. If you want to buy a home, I can help you buy a home. If you want to sell your home, I can help you sell your home. But because I had so much banking experience by that time, I knew how mortgages worked. I knew how loss mitigation works. Loss mitigation is when you fall behind on your mortgage. That's the department that deals with your foreclosure. Because we're talking about 2000, after 2008, it's about a 5-year run of just people just losing all their properties, all types of crazy stuff. So through that time, I had a lot of family and friends would call me, hey, so-and-so needs help. Hey, what's going on with this person's, house? They got to sell it. All that stuff happened. In 2018, 3 different families I got referred to. And the third time it happened, I had to stop. Like, there's a lesson that I'm not getting from this. So long story short, I got referred by a family friend to go meet this lady and her siblings because they needed to sell their house. I think I told you the story. Sell their house in Queens.
Story. Great story.
Yeah, so there was 4 siblings that were still alive, and their mom had passed away. And when the mom was alive, they all grew up in this house that we were currently sitting and talking about. When the mom passed away, they were like, we got to sell the house. So I'm going there like, well, you guys are behind your mortgage. What's going on? For me, my job is to sell the house. We go there, we sit down, and the 4 of them are there, and I'm like, why are you guys selling this place? Context, someone lived in the house. It wasn't none of the kids. It was one of the grandkids lived in the actual house. Mom passes away. Dad passed away probably 10 years before that. What mom did was she went and took out a reverse mortgage while she was able to do so. So let's say like 2 years prior to that, she took out a reverse mortgage for like $400,000. Gave each of the kids, there's 4 kids that were still alive, gave each of them $100,000. And she told them, I don't want to die and you guys get all this money and I can't see it. For noble reason, right? I want to give you guys the money, give it to the grandkids. I want to watch everyone enjoy the money while I'm still alive. So then that happened. 2 years later, she passes away. They weren't planning for it. She just passed. And now they're like, we have a reverse mortgage because that's what started the foreclosure was the reverse mortgage. And they're like, well, we can't afford to keep the house. I'm like, well, why not? She just gave y'all like $100,000 like 4 years ago. So 2 years ago. Just put the money back together and then keep the house. So with the reverse mortgage, when the person who takes out the reverse mortgage either passes away or moves out the house. Moves out the house means they didn't sell it, but they went to like a nursing home or they went to go live with family. That triggers a sale of the property. And not a sale that you got to sell the house. You have to repay the mortgage. So reverse mortgages only are valid if the person who took out the reverse lives in the physical house. If they don't live there, the bank has a right to tell you now, you have to pay us back and then keep the house and do whatever you want to do with the house. But you got to pay us back our money. So that $400,000 loan becomes $5 and some change. So they owe the bank now because the banks are in the business of making interest on their money.
Correct.
So her loan went from 400 to like 520 or something like that. They're like, we don't have 520. I'm like, okay, well, y'all can go get a loan from the bank. They're like, well, our credit's bad. I'm like, okay. Y'all can sell the house on y'all. Well, I don't have any down payment money either. I'm like, y'all are killing me right now. Y'all don't have anything to get this done.
They blew the money.
Money's gone.
Damn.
Money's gone. And to tell you how old the siblings were, the youngest person in that conversation was 65.
Wow.
So now put it into context. You've worked your entire life. Of the 4 siblings, 2 of them owned property, but they lived out of state. One lived in California, one lived in Virginia. The other 2 lived in New York, and they were renting. And they're like, I don't have no money. We don't have the money. Money's gone.
Jeez.
So now they're 65. The youngest person's 65. And I'm like, you guys can't buy the house back. You don't have any children, because they all had kids. You don't have any kids that can afford to buy the house. You don't have any grandkid. The grandkid that lived in the house was 40. He's 40 years old, but he had some disabilities, so he couldn't buy the house. So in our conversation, I said to her, wait, did your mom have life insurance? And 2 of them said to me, why? And I'm like, what do you mean why? She said, why would they get life insurance? How would that help us right now? And it was in that statement, I'm like, oh, you guys don't understand the financial foundation, the basics of why life insurance is even important. If you had the life insurance and mom would have taken out the life insurance at the same time she took out that reverse mortgage, she could have got a life insurance policy big enough to pay off the house when she did pass. Granted, she was an older woman, so it would have been very expensive, but you're taking out a reverse mortgage anyway. Right. So however it costs, take that money out of the money you were going to give to the kids, put it aside to pay for life insurance, and give them the rest.
Got it.
Because you pass on, the kids get the house free and clear. They don't have to sell it. They could have sold it if they wanted to. That's fine. They could have left the grandson living there if they wanted to. That's fine. They could have done lots of things. The money gives them options.
Correct.
That's the most important part about life insurance and financial planning is that having control of your money gives you options. So that's what got me back into life insurance. That happened with them. The next month, I went to my life and health license again because it had lapsed because I didn't renew it. So I went and got my life insurance license to do life and health and educate my community on this is why having insurance is important. Hard stop. That was the basic for it.
Wow.
So talk about life insurance. Okay. So you mentioned today's topic is basically buying rental property or through life insurance.
Yes.
So because there are steps to that.
Yes, absolutely. So the basics are there's 2 types of life insurance, term life and whole life. Term life, think of it like car insurance. Like you have it for 6 months or 12 months, right? Life insurance a little bit longer. So you can have term for 10, 20, 30, or 40 years, depending on the company. But the reason why I compare it to life insurance is the reason why I compare term insurance to car insurance is that it only kicks in if something happens. You get into a car accident, your car insurance kicks in. If you don't get into a car accident, the car insurance doesn't do anything. They don't send you money, they don't give you money or refund, nothing happens. Term insurance, same as that thing. If you pass away, the term insurance kicks in, then they pay out your beneficiaries the money, right? Whole life, completely different. It's different in the sense that something doesn't have to happen to you to utilize the benefits of the life insurance because it's called life insurance, not death insurance. So what can I do with life insurance if I have a whole life policy? Inside of your policy, you can save money inside the policy. Now, once you've saved up a certain amount of money, you can access the money that's inside the policy for a down payment for a house, which is what I did. You can use it to buy a car. You can send a child to school. You can send yourself to school. You can leave it for the next generation. You can do lots of things with the money.
Set up a business.
You can set up a business. You can invest in the stock market. Think of a whole life insurance policy like a savings account. That's the closest financial product to it. Now, what's the benefits of a whole life? Because a lot of people out here, Dave Ramsey and the likes, will tell you it's a scam. I'm going to just be real with y'all. Dave Ramsey ain't talking to you. He's not talking to me. He's talking to people that have a certain foundation of finances already. So if you don't have that already, he's not talking to you. Yes, they say get a term policy and invest the difference. And what that means is if you got $1 million term policy and you're paying, let's just say $100 a month for it, if you got the same $1 million whole life policy, it would probably cost you, let's say, $600 a month. So there's a huge difference in price.
Right.
$500 more for a whole life policy. Dave Ramsey's method and Susie Orman's method is to get the term policy for $100, take the other $500 and invest it into the stock market, mutual funds, ETFs, or whatever. The part that they leave out in the conversation, which is why I say that they're not talking to you, is that what is your behavioral relationship with the money? If you've got an extra $500, would you save it? If the answer is no, I don't care how much extra money I give you, you're not going to invest it into something that's going to be there for you later on down the road. Did your parents teach you the financial habits of how to manage that money? Do you practice saving money? I ask people all the time on my consultation calls, when you get paid, what's the first thing you do? They're like, oh, I pay my mortgage. Oh, I pay my rent. Oh, I pay Netflix. They're paying a bill somewhere. And I tell everyone the first thing you're supposed to do when you get paid is pay yourself. And they're like, what? Why would I do that? What does that look like? Paying yourself is saving money for yourself. And behaviorally, our relationship, when I say our, I'm talking about black and brown people, we're not taught that way when it comes to money. It's you work to go make the money to pay bills. When you get a job after college, you're working to pay bills. We're taught from very, very young, over and over again, you work because you want to buy things. No one says to us, very few of us, you work to invest. That's not the phrase that we're taught. And it's not, I don't blame my parents, I don't blame our culture, it's where they came from. So they're teaching you the things that they were taught to them. Right. My job is to teach my son and the generation behind me there's a difference. There's an alternative to just working. Right. Because, we can have a whole nother conversation about our parents saw the generation before them work for companies for 40, 50, 60, 70 years, retire and get a pension.
Yeah, as a whole, we've kind of all been indoctrinated in a sense.
Into that system.
In a certain belief,
And but our generation was the first one where we saw that pensions went away. Yeah. So our parents only know that you can work and get a pension, and they got caught in the middle of that machine where it went from you got a pension to, oh, you got a 401k, you take care of yourself now. Right. And now we come into the cycle of we watched our parents and our elders just lose their jobs. Yeah. So you don't have a pension, and how are you managing the 401k? Because I ask people all the time. You have a 401k?
I do.
You have a 401k?
Yeah.
Who's managing your 401k?
Well, not me.
Your job is.
The job is, yeah.
Yeah, but who's managing it?
That's a great question.
Right. Nobody knows who's managing a 401k. Because normally the best answer I get is, oh, TIA Craft or Charles Schwab or Vanguard. I'm like, okay, cool. That's a company. Who's a person that's dictating where your money's going? Oh, I don't know. Who do you call when something's wrong with your account? Oh, I call the 800 number. Okay, who you talk to? A customer service rep. All right, so let me just sort of reframe this for you. You've been working for 25, 30 years. You've got about, on the good end, $800 to $1.2 million in an account waiting for you. And the person that can move the money around is not you, even though it's your money. If you walk past that person on the street, do you even recognize that person?
No.
But that's the person that's in control of all of your retirement funds. If you're comfortable with that, no problem. But if somebody's got $1 million for me, I want to know who that person is.
Right, right.
I want to know where they live. I want to be able to go walk up to them. Let's have a conversation. Last year, my money went down. What happened?
Right.
Right.
We have none of those things. But we're so indoctrinated, like you said, into this is what we do. You work, you take money out of your paycheck to avoid taxes, and you put it into this thing over here called a 401k. Most people don't know that 401ks were made it was created in the 70s. It was a way to shift responsibility from the companies, the businesses, to move it to the employees. Because now Your job's not responsible to pay you a pension. They don't have to make sure they have money every month to pay you for the next 20, 30 years because you retire at 65, you live till you're 100, that's 45 years. They have to pay you. Nah. They got together.
They got rid of that.
No more of that. You take care of yourself. But we're not taught all of the proper things. And this whole 401k thing, so there's a lot. The end of that conversation looks like, if you want to leave with your job, that's fine, but know what you're doing. If you want to control your money, who's going to take care of your money better than you? Nobody. So at least take back control of what you can take back. Understand what works and how it moves and why I'm doing the IRA, like a retirement deferral, versus why I'm doing a Roth IRA where I pay taxes on the front end and I get an interest fee on the back end. That's the reason why I do all the education I do around insurance and personal finance, is because if nothing else happens, you should at least understand what you're doing. You can let someone else do it, but you got to know that person's job. And if you don't know what that person's job is to do, they could be robbing you. Or they could just doing the job so bad that when it's time for you to get your money, you're screwed. And now you can't retire. Now you're working at Walmart. Nothing wrong with Walmart outside of the DI stuff. But now you're working at Walmart because you cannot retire. So you work for 40, 50 years to retire. You get to 70 and you're like, oh, I got to go back to work because I can't afford this $1,000 rent and it's $200 for milk because the prices for food is outrageous. And if you're lucky, you had kids that were financially responsible and they can take you into their house to take care of you. Now, you know that whole twice a child, once an adult, once a man thing? That's what that looks like. But I feel like I'm getting you guys sad. Are you guys
No. No, because I'm thinking about the 401k. It's a lot of great information. And we talk about the 401k, 403bs and stuff like that. So it's almost to the point where it's like I'm thinking about the 401k now. I'm like, wait, we're in this job for about 20, 30 years. We're getting taxed.
You're not getting taxed on a 401k.
Well, but
tax deferred.
It's tax deferred.
Yeah.
But it's like we're almost getting taxed twice if you were to withdraw that money. Like you're getting taxed from your paycheck, and then it's going into
if you wanted to take it out of the 401k ahead of time. Yes, you would.
That's
the
pay
part. Penalty.
Right. There's a penalty. Correct.
Not a tax. You pay penalty. You're gonna pay tax anyway.
Right.
But you're gonna pay a penalty.
Pay a penalty. That's the best word.
Yeah. But there's ways around that, right? I'm not saying avoid the penalty, but if you leave a job, you have now the ability to move that money to a place where you can control it, or just get better interest, or make it more secure. The problem with the 401k is the money's inside the actual stock market. So if you were going to retire in 2008, like that year, you were 65, and you were going to retire, you would have saw your portfolio, if it was $1 million, go down to like 600,000. Wow. I would have lost my mind. That would have happened, the first time that would have happened when I was alive would have been 2001. What happened in 2001?
9/11.
9/11 happened. Your money's in the stock market. The market tanked the next day. People lost lots of their retirement money. It happened again 2020. COVID. So your money's in the stock market. The stock market is very volatile to the movement of the world. So if you can tell me you can time when a world event's gonna happen,
well, good.
You'd be a billionaire.
So you're basically saying life insurance is a safer bet against that.
It's a safer hedge and it's a safer financial vehicle. I'm not saying put all your money in there, but understand how it works, right? So we're talking about money. It's all about options. That's the most important thing when it comes to your money. So how did I use the insurance to get into real estate? When I went and got relicensed, I started doing a lot of education around money. Like how do I use money in a better way? Like now my mind is, I make money, I invest first, I spend second. So now I'm like, okay, when I learned about more things about insurance, I found out about a term called infinite banking. I'm like, well, what's this? I learned about velocity banking. What's that? Infinite banking is when you use a life insurance policy like your bank account, like a bank, right? So like I said, the closest financial product is a savings account. You save money inside of your insurance policy, and when you need to access money, you call the bank or you make a request. Relatively easy. I do it through an app. You can call them on the phone. They ask you, they tell you how much money you can pull out, right? And this is where we had the last podcast. You can access up to about 85% of your cash value at any time for any reason. You want to take all the money out, put it in your bed, take your clothes off and sleep on it, Knock yourself out. Have fun. You can do that. Or take the money and put it somewhere else that's going to make money for you. When you borrow the money from your insurance policy, because you're not going to withdraw it, so it's just a borrow, you don't pay any taxes on the money you borrow, because in the United States, you don't pay tax on a loan, which is why in the real estate business, they always tell you you got to get your equity out of your property by doing a refinance. That money comes to you tax-free. You don't pay taxes on it. Same thing for the insurance. Any loan, you don't pay tax on it. So what I did was I set up an account and I started putting money into my insurance policy. Now, what's really important is that I have some really smart friends and really smart clients. You have a minimum amount you're supposed to pay on your insurance, and then you have a maximum that you can pay. If you don't do the maximum, you don't have extra money in your policy. You cannot pay the minimum. If you're paying the minimum, all you're doing is paying for your actual life insurance. So I was doing the maximum. As much as I could put in there, I was putting in there, not to go over the limit. And then once that got built up to a certain amount of money, I now borrowed the money from my life insurance policy and used that as my down payment to go buy a piece of property. That's how I started investing in real estate for myself. So I took, at the time, it was like $12,000 out of my account, of my life insurance account. I used that as my down payment. I used some business credit for my closing costs because I didn't have any money. I told you guys what kind of income I was making. Money was tight.
Right.
But that's what I did to buy the property, which was the down payment came from insurance. The closing costs came from a business credit card that I liquidated, used that for closing. Now I'm a landlord.
For which property?
Where did you invest?
Yeah,
where did I invest?
Right.
So I started investing out of New York State. I'm from New York. New York's real estate is very, very expensive. And I'm like, what can I buy with the income that I make right now? And then because I was in real estate for so long, I knew it wasn't going to be New York. So now I started looking around New York. And from my personal preference, I said I want to be within 3 hours of driving from New York. So 3 hours around New York is a really big radius. It put me in Connecticut. It put me in Jersey. It put me in Pennsylvania. It put me in Delaware and like the tip of Maryland. Okay. I was like, Philly was the hot thing back then. This was 2016. So I started looking at properties in Philly because their numbers were like, you could buy a house back in Philly in 2016 before the boom for like 50, 60 grand. And it wasn't like a rundown piece of property. It wasn't like Baltimore. It was like, someone lives in there right now and they're paying rent. 50, 60 grand, I can do that because once you do the down payment and the loan amount, I can afford that.
Right.
I can afford it on my income if the tenant doesn't pay. That's another thing nobody's talking about. I don't know why. And I mean, you know me as insurance, and the reason why I didn't go into real estate because everybody's selling you real estate, but all of them don't know what they're doing. There's a lot of people lying and telling you all types of random foolishness when it comes to real estate investing. They make it sound real easy.
I'm gonna get all of y'all in one room, and I'm gonna, because we do have a lot of people here, a lot of real estate gurus who talk about investing in real estate. We're gonna get all of y'all in one room, and I'm gonna say who's lying and who's telling the truth.
Right.
Because, well, I want to hear your side of it.
So the part about real estate people do not tell you about is what happens after you buy the property.
Okay.
The goal isn't just to buy. I heard, I forgot a guy's name that said this. The goal is not to buy the property. The goal is for the property to make money for you. If the property's not making money, you failed at the original goal. So once you buy the property, one, I'm a super conservative person, thanks to my dad, who is an accountant, and he gives me all of the things that can go wrong up front. That's how his brain works. Might as well be a lawyer. He's gonna tell me everything wrong from the gate. So he's like, if you go, I mean, that's my advisor, right? That's why I go to before I go do anything financial. And he's like, if you can't pay the mortgage, don't buy it. And I'm like, bro, this is not what they tell me on TV and YouTube.
Right.
They tell me, go leverage all the money I can get, buy the property, and the tenant's gonna pay the rent. And he's like, how old are you? My dad's obviously older than me. He's like, I'm gonna tell you right now, whatever you think is gonna happen, that's gonna happen, and then something else you didn't think about is gonna happen. So if you can't afford to pay that mortgage by yourself without the rent from the tenant, don't buy it. And my dad's favorite saying, take my foolish advice. And when he says that, I know he's not talking after that. Once he says that last sentence, he's done talking.
He's done
so go
talking.
do whatever you want to do after that.
Right.
So I was like, fine. Take his foolish advice is, I got to find a property that I can afford to pay if the tenant doesn't pay. So I set my parameters. I figured out how much cash flow is a minimum for me to look at a deal. And now I start looking for properties. Went to Philly for I was going to Philly probably almost 2 years back and forth. So I worked Monday, through Friday, 9 to 5. And on the weekend, on a Saturday, I get up in the morning and I drive down to Philly, 2-hour drive.
Looking for properties.
I looked them up online during the week.
Okay.
Zillow or Redfin or Realtor.com or whatever. And I drive to Philly to go look at the properties because I'm not from Philadelphia. I don't know the neighborhood. I don't know what's what. I don't know where things are. So now this is for me to get familiar with the investment environment. Philly's a crapshoot back then. Now it's a little bit better. But back then, Philly's neighborhoods were block by block. And what does that mean? If you're on one particular block, that block looks perfectly fine. People are walking their dogs. The grass is cut. Everything looks good. You cross the street you cross the intersection on the same street. It's a war zone. Like the little junkies are outside. The houses are boarded up, and I'm like, this doesn't make sense. Because I come from New York where we have neighborhoods. Like they have neighborhoods in Philly, but back then the neighborhoods weren't all cohesively cleaned up. So your block was fine. The next block, you don't get robbed. You go the other way, you might get shot. There's a lot of stuff going on. I'm like, I'm not comfortable investing in this because if something happens, I got to come back down here.
Right.
And then what kind of tenant am I going to get to put into this property? This is all stuff the gurus are not telling you about. What's your quality of tenant? What's the neighborhood going to do to the quality of tenant you can get? How much are you paying for repairs? Because you buy a property in a bad neighborhood and it's physically dangerous. The contractors that are going to come there to work on that place are not the same contractors that's going to the really good neighborhoods.
Absolutely.
So now you got to figure that out too. And if I'm not a handy person. I mean, I can manage in my own house. I'm not fixing your roof or replacing a window or changing a pipe or a toilet. I'm not doing all that. So I got to call somebody else. What's that going to cost me? There's a cost for that. If the person doing it qualified to do it, or it's just some random, everybody got a Pookie.
Right.
Yo, just call Pookie. Pookie put a toilet in for you. Pookie won't put a toilet in today because he want $25.
Right.
And then tomorrow the toilet's leaking again. That's not gonna help me. I need it done right. So that's what I was doing with Philly for going on 2 years back and forth, and I couldn't figure out the neighborhoods, so I wasn't comfortable investing. On one of my trips, I stopped by. I have an aunt that lived in Delaware, right? So stopped by there, and she's like, "Why?" Because I would just stop. She's on the way back home, so she's not too far from Philly. I would stop there, go see her. She's like, "What are you doing out here all of a sudden, like all the time?" I was like, "Oh, I'm trying to invest in real estate." She's like, "Well, why don't you look in Delaware?" I was like, "I don't know. I never thought about Delaware. No one I know was talking about Delaware.
Right.
Everybody's talking about Philly or Baltimore." So I started looking in Delaware, and Delaware's real estate market in 2016 was the exact same market as Philadelphia. You're buying a row house or a townhouse,
right?
2-bedroom, 1-bath, around $40,000 to $60,000 for in between one. The high ones were like 75, 80. And the cheap ones were like 20 grand, 10 grand, but it was a boarded up piece of property. Exact same market.
But a lot safer to invest in.
Wasn't safer. But there were neighborhoods. So if I was on a block, I can look up the street, drive around. Oh, this neighborhood's kind of the same. If I go 2 blocks down and make a left, this neighborhood over here it's a crapshoot. Like the druggies are outside. But now that I'm going there, I can see, well, don't buy anything over in this area because this area is okay. And that was how I started buying my real estate investments, was based on the neighborhood inside of Delaware. And I did that. I mean, like I said, it was cheap back then. You can buy a 2-bedroom, 1-bathroom back then. The cheapest house I got was $23,000.
$23,000.
And that was livable. You could move someone in the next day.
And you were renting that for how much?
Back then, 2-bedroom, 1-bath would rent for about $700 to $800. A 3-bedroom rented for about $900 to $1,000 for a 3-bedroom, 1-bathroom house.
And how soon after that did you follow the same steps from taking the funds from life insurance and investing in your next property?
Oh, once I figured out how to do that, I thought I found the cheat code to life. I just kept doing it.
Okay.
Because as long as I had enough money inside of my insurance policy, I would do that. Then I'm like, I can use the business credit cards and liquidate those and buy properties too. So my first property was 2017. I bought 2 in December 2017. I'm going to tell you a fun story what happened a week after I bought those 2. But I bought those 2 December 2017. I didn't buy anything for 2018.
Okay.
That was on purpose. I wanted to see what it was like to be a long-distance landlord, now called a long-distance millionaire, right?
Got you.
I wanted to figure out what the process was because my work experience from all those years of working, I did a lot of property management. I've been in property management for over 15 years at that point. So I was used to managing properties at a distance, but I was still in New York. So I live in Queens. My job's in Manhattan. I'm in Midtown. I'm managing properties in In Harlem, I'm managing properties Upper West Side. I'm managing properties in Brooklyn. I'm managing properties that I don't physically can get to right away, but I have a maintenance guy. I have a team. I know who to call when something happens. So I already knew the concepts. Now I had to do it for myself. So I bought those 2 in 2017, then buy another in 2018 to see what was going to happen. The week after I bought those 2 properties in 2017, it's December 17th I closed. December 24th, Christmas Eve, I get a phone call from one of the tenants. Hey, it's cold in my house. I'm like,
Yeah,
all right.
that's funny. I was reading that part. Yeah.
What? I'm like, I know why you're calling me. What you want me to do?
Right.
She's like, it's cold. I think the boiler is out. I'm like, I just bought this place. I did an inspection. I spoke to the landlord that was there. I did everything I was supposed to do before I bought it. The boiler still goes out.
Wow.
So now I'm like, I got to go figure out how to get the boiler fixed. On Christmas Eve, I'm in New York, and the house is 3 hours away from me. Resources. You have to have a network. So I called a friend that I knew had some stuff down there. He called another friend, and then I ended up calling. I called like 5 people. One of them called me back. He's like, yo, I can send my handyman over there. He'll take a look at it for you, let you know what's up. My worst case scenario is he got to change out the whole boiler. That's going to be like $8,000. My best case scenario is it's a board inside the boiler that got fried. It's $200. That's the range. It's Christmas. I spent all my money.
Crazy.
So now what am I going to do? I'm like, I got to put this on a credit card. We'll figure it out. But the lady needs heat today.
Right.
So the handyman went over there. He's like, he gave me the biggest scare of my life. He's like, yeah, this thing's probably like $5,000 to fix. He's like, I'll let you know once I'm done. I'm over here at my mom's house trying to figure out what I'm going to eat for breakfast while I'm over here sweating, trying not to poop on myself.
Right.
He calls me back. He's like, yeah, the board's done. I'm going to go grab you a new board and come back and put it in. The boiler should work. But I don't know. Let me see.
Okay.
He goes, grabs the board, comes back, puts it in. The boiler starts up. It's working. I'm like, thank God. It's a Christmas miracle. I'm like, hold up. How much does this cost? He's like, oh, it's like $800.
Okay.
I was like, can I pay you on a credit card? He's like, no. What do I look like to you? He's like, you can Zelle me or send me some cash.
Right.
All right. Give me till next week. I was working. I'm like, give me till next week. I'll send you the money. He was like, all right, no problem. But make sure I get my money or else I'll come back here and turn this thing off. I was like, no problem. I'm gonna make sure you get paid. But that was my crisis 1 week after buying my first property. And once I got through the crisis, I was like, I can do this. I can do it. Like, that's the worst thing that happened in the wintertime is that the heat goes out.
So when doing this stuff, you got to also have certain cash flow for these kind of disasters.
You got to have cash, period. Cash flow or actual cash. You got to have either credit cards or a cash reserve, or you're going to pull money from other places to make. This is why I was never the person that told people to go quit their job. Your job gives you income. That's your partner. That's where your money's coming from. But are you managing your money properly? Because if you're not managing your money properly, you'll never have money. So it's the mindset, it's the behavior behind your paycheck. What are you doing with your paycheck? Which is why I tell all of my clients, the first thing you do when you get paid is what?
Pay yourself.
That's right. That's where that came from.
Got it. But, okay, so in Delaware, it's about what, 3 hours?
It's a 3 hour drive.
3 hour drive.
Yeah.
So when that boiler broke, were you saying to yourself, because I know a lot of people that probably would have quit real estate. So you wanted to go more, and you was like, I can do this.
Yeah, I can do this with these 2 properties. That's what I told myself. I can do this with these 2 properties because I only had 2 at the time. And I told you guys, because I got so scared from that first experience, I'm not looking to buy nothing else for 1 year because I want to see what else can break on me while I have these 2 properties. So I was waiting for something to happen.
It's waiting for something. Okay.
That's why I didn't buy anything else that next in 2018. I didn't buy anything in 2018.
So what's like the real estate portfolio looking like now for Andre Green?
So at my peak, I got to 20 units managing by myself, spread across 10 properties. I did most of that buying in 2020 and during COVID. And the peak of chaos was when I got most of those properties. And I learned something else during that process. It's that I think Warren Buffett said, when everyone's running away, you buy. Absolutely. When everyone's selling, you buy. Right. When everyone's buying, you sell. Right? I saw that in real time in 2020 because there were a lot of properties available because when COVID happened, our lovely government made a public announcement. What was the announcement? Due to this medical emergency, you don't got to pay your bills. Don't pay your rent. Don't pay your mortgage. Don't pay nothing. Everybody stay in the house. And as a landlord, as a tenant, that sounds like a great idea. I'm on vacation. I got Christmas in March now. I got to pay nothing. I got extra money.
Right.
As a landlord, I'm like, bro, you just told the entire country not to pay their rent. How do you think I'm supposed to pay my mortgage?
Right.
But he also said, don't pay your mortgage. Okay. At face value, that sounds like a great idea. But because I have experience and I came from the banking world, I know that banks are not going to forgive my missed mortgage payments. I also have a lot of experience with student loans and what happens when you don't pay those.
Right. Oh, yeah.
So they're not just going to give up the money. So I'm like, this is a setup for something. So even though I was told, don't pay my mortgage, I'm still paying my mortgage. And because I came from property management, I knew what happened when what they call it a market rate person. So a person is paying rent from their job. I know what happens when they lose their job. So when I started investing, I wasn't looking for market rate tenants. I was looking for Section 8 tenants. Full circle moment, my very first job in real estate was working with Barber, renting apartments to Section 8 tenants.
Right.
I knew the setup of Section 8. They're going to pay about 70, 80% of the rent, sometimes 100%, and the tenant has a small portion to pay. So if I've got a $700 two-bedroom, one-bath townhouse, Section 8 is paying $550, $600. When I got my mortgage back then is like $350, $400. So if the tenant didn't pay their rent, I'm going to take the Section 8 rent and pay the mortgage. And I'm going to chase the tenant for the rest of the money to make me whole again. But my mortgage is getting paid.
Paid, right.
Throughout, COVID started 2020. 2020, 2021, 2022, I had no missed rent payments, no missed mortgage payments.
Because of Section 8.
Because of Section 8.
They were still getting...
They were still paying their portion, their rent. Now, we did have the government shutdown throughout that process. There was a furlough in, I think, like 2018, where everyone, like the government stopped post. There was no mail getting delivered. The Section 8 office, so just so you guys know, Section 8 receives their money in terms of funding from the government once a year. They don't get it every month. Okay. They get it normally the end of the year going into the beginning of the new year. So when that furlough happened, it was the end of the year. So Section 8 never got their money from the government, so they couldn't pay out the rent for a month or two until the furlough got cleared up. They paid the money back. They caught up their rent payments that they were supposed to make, but I had to pay my mortgage in between that time. Now, my dad's foolish advice came in really handy then. Because he's like, don't buy anything that you can't afford to pay yourself. So for like 2 months, I'm paying the mortgage out of my own pocket because I'm still chasing tenant for the little piece and I didn't get any rent from Section 8. So I was able to never miss a mortgage payment as long as I've been a landlord. That's what I learned throughout the process.
That's powerful. So before the mics got hot, we was talking about how there's like a life cycle when buying real estate. And so where you at now with it?
Yeah, so there's a life cycle to real estate. The life cycle is you want to get in. That's the biggest piece. Everyone's trying to sell you programs and courses on just get into real estate because they're going to tell you all of the good things that could happen, right? Your your tenant's going to pay off your mortgage. You're going to gain equity. You're going to have cash flow. Life's going to be easy. It's passive. That's a lie. Real estate is not passive. It's only passive for one person in the entire real estate industry. Can you guess who that person is?
Mortgage.
The mortgage.
The bank, yeah.
The bank is the only passive part of real estate. Everybody else is working. The landlord is a glorified property manager for the bank. The property manager is a property manager for the landlord. The tenant is just in there doing whatever they're going to do. The appraiser makes money because you got to go get your property appraised. The loan officer makes money off of giving you a loan. The agent makes money from selling or renting your place. The title company makes money off of providing a service when you got to close on a property. Everyone's got to do something in real estate except for the lender. That's it. So the only passive role in real estate is to lend money in real estate. There is risk involved, but it's passive. You're not chasing nobody for nothing. As a landlord, the toilet breaks, the sink breaks, the tenant don't pay, they threw a rock through the window, oh, my kid put their head in the wall. All that stuff has nothing to do with the bank. It's the landlord's job and the property management job and then the contractor's job. Real estate's not passive. I don't know who said that the first time. It's a flat out lie.
So even though the real estate helped provide funds to pay your mortgage and create a lifestyle for yourself, you still got to know that stuff entails all of that as well.
Absolutely. You have to understand the business. You got to understand what you're getting into, right? So the cycle of real estate is you're going to try to get in. So, right, you want to buy the property. Once you buy the property, you got to get the property rented. And the longer you hold that property is the more equity you're supposed to build inside the property. That doesn't always happen, so let's not pretend like it does. But over time, your mortgage gets paid down, and your mortgage gets paid down, and you increase rents. So when you increase rents, you technically gave yourself a raise. Because if I bought the property, my mortgage is $350. Well, let's say my mortgage is $400. My rent is $700. I'm making $300 a month. The next year, my rent goes to $725. I gave myself a raise of $25. Over time, that rent goes from $700 to $1,000 to $1,200. I'm giving myself an increase. The mortgage is still $400. The expense hasn't changed. But the part that the gurus are not telling you is you've got maintenance that happens throughout the year or over the years. So, the roof starts leaking. That's an expense. The tenant moves out is the most normal expense. And when that happens, you've got to do a unit turnover. So if you've got carpet in your place, you got to go clean the carpet or change the carpet. If you've got regular vinyl floors, you've got to go clean them or change them. You've got to paint. You've got to make sure that the bathroom looks a certain way. So you might want to change the toilet. You might want to redo the shower area. Your kitchen, how long have they been in there? You got to change the cabinets, paint them, replace them, new oven, new fridge. This is all an expense. So for easy numbers, if you're making $500 a month profit on your rental, on one rental, you made $6,000 for the year. Tenant moves out, you got to replace anything in the bathroom or replace the kitchen, paint it, and get it ready for a new tenant. How much is that going to cost you?
Probably a good like $2,000, $3,000.
Where you buying appliances from?
I'm just kidding.
You're gonna,
like the regular, probably
appliances
all of
by
that.
themselves is $1,000, $2,000,
probably
right?
all of that.
But then you got to pay the contractor to do the repair, right? So the contractor's giving you a quote for, or if you're lucky, $5,000. Realistically, to turn an entire property is $10 to $20,000 unit turnover.
Wow.
Unit turnover.
That's crazy.
So the reason why if you don't want to do all of the work on the front end, you're going to have a lot of maintenance along the way.
Yeah, that kind of makes sense.
Right? So let's say you don't do a full unit turnover. It costs you $8,000. You only made $6,000 for the whole year.
Yeah.
So you're negative $2,000
right.
off that one rental. They don't tell you that part when they're telling you, buy my course.
Right.
You're going to be rich in 2 weeks. That's
right.
not a thing. That's not a thing. So you got to understand what's happening, right? So that was why I waited the year after I bought the first two. I wanted to see what was going to happen, and then I sort of moved on. But the life cycle is, as you start making more money because you're increasing the rents. You want to pay off as much debt as possible because you want to get debt free on the investments. Now, conventional knowledge will tell you leverage as much as you can. So whatever you own in real estate, Grant Cardone loves this conversation. Go and borrow as much money as you can borrow for your real estate because that's tax-free money and your property is going to pay for it. He's not talking to you. There's a reason for that. If Grant Cardone, and he says this himself, if he goes and defaults on his mortgage, they're not coming to take his stuff. Because 2008 happens, the regular market tenants lose their jobs, they can't pay their rent, which means you can't pay your mortgage, because when you're talking about Grant Cardone's level, his mortgage payment is millions of dollars a year, right? A couple $100,000 a month. He's not paying that out of his own pocket. The property's supposed to pay for it. So the property doesn't pay for it. I ain't got it, you ain't getting it. So now what? He goes into default. Now the banks will go and talk to him to restructure the loan to make it more affordable. We'll figure it out. We'll come back to it in the future. They're not coming to have that conversation with me. Like, oh, you missed your mortgage payments 2, 3, 4, 5 times? Yeah, we're going to come get that. Give me that back. So now my down payment's gone, my cash flow's gone, and I lose the property. You got to understand who the information is for.
Got you.
Dave Ramsey's not talking to you. Grant Cardone's not talking to you. You have to understand, I'm talking to you. You got to be prepared for the worst case scenario.
Powerful. And so you got a great book here called The Long Distance Millionaire, the step-by-step process to become a millionaire through real estate and tenants by Mr. Andre Green.
Yes.
Talk to us about the process. What made you want to write this book?
So this has been a lifelong pet project of mine, right? So I wrote the book. It took me 2 years to actually write the book. And it was because I think my journey through life has been, I had a 9 to 5, I've always worked. And the more I got into business, I realized that you have to have certain things to be a business owner. You have to be able to generate income, right? I learned that through real estate, you can generate income, but it's through the tenants. And then as I got more educated and more into business, I realized that I have to have something that I can actually offer people. And what is the thing that I have to offer? Because everything that I've known, it's been in my head. I never took the time to sit down and write it out. So someone gave me good advice once, like, yo, every time I told anyone that I own rental properties outside of New York, the first question is, how do you do that? They always ask me, how do you do that? I'm like, well, how long you been doing it? Like, how much money do you make? They want all the information. So I sat down and I wrote it out, right? This book is literally what I was been doing for the past now 9 years, plus 15 years of life experience in real estate, in a book. And I start in chapter 1. Chapter 1 is about mindset.
Mindset, yeah.
That's the very first thing we talk about in this book, because you got to know what type of investor you are before you start buying anything. Don't just buy something, a course, a piece of property. Don't just give your money because it sounds good for someone else. You got to do what sounds good for you. So when you figure out what type of investor you want to be, then I walk you through the rest of the journey of how you become that investor. So it tells you step by step. I have a workbook that goes along with the actual book. I give you my actual letters, templates. I give you information about how to get your lease properly set up. I don't give you a lease because depending on what state you're in, that will change. But I give you all the right questions to ask or tell your attorney.
Okay.
I give you the forms I give to tenants, the checklists. I give them their house rules. Everything's inside the workbook, right? So you get access to all of that stuff. And if you got to send a notice because you misrent, or I got to send a notice, I need access to the property, all that stuff's inside the workbook. But I have testimonials and I have people that have used this step-by-step process and bought properties. They're making money right now. And I used to do a mentorship program, a one-on-one program. And one of my first students was trying to invest in real estate on his own for 5 years before he got to me.
Wow.
Me and him spoke, met through a friend. Me and him spoke. I'm like, listen, I'm going to teach you how to do it. From the day that I told him that, he bought his first property 3 months later. The right way, right? And I shifted where he was looking to buy. I shifted how he was going to finance the property. I walked him, I handheld him through the process. But he's now a long-distance landlord because the formula works if you work it. But you gotta, my biggest fear is that someone takes the information. That's probably why it's taken so long to start promoting it. If you take this, you can buy property. But if you buy the wrong piece of property because it's not the right thing for you, you're gonna blame me. I don't want that. So that was why I was doing the mentorship, but it takes up a lot of time, so I stopped doing it. It's on pause for right now. But you can take the book from start to finish and go buy a piece of property within whatever timeline you have, because everyone's not starting at the same place.
You're like a one-stop shop. Get the life insurance through me.
I mean,
When
you
you're
can
ready
do
to go
that.
get the property, I'll
You
show
can
you
do
how
it.
to go get the property.
You can. I can do. I mean, I got a lot of experience.
I see. I know.
Yeah.
I wanted to know your take on, now that Trump is in, how will real estate, what do you see real estate with Trump and his administration being in?
I don't think the focus is really going to be on real estate. Trump is a real estate guy. I do think they've got to they're going to play with the interest rates a little bit. Everyone who's been sitting on the sideline for the past 2, 3, 4 years saying, I'm waiting for the real estate market to crash, it's not going to crash.
You don't think so?
No, it can't crash.
Not even by like 30%, 50%?
That's not a crash. That's
Was
a
it-
correction.
Okay, so a correction then. You think they're going to correct it?
Yes and no.
Okay.
There will be a
I'm happy
correction.
I asked that. Okay,
Yeah.
so there will be a correction.
There will be a
'Cause
correction.
There is a difference now that I know.
Yes.
Okay, talk to about
Yes.
that.
There will be a real estate correction. So the prices would traditionally correct about 20, 30%. The price would come down.
Okay.
But because our interest rates went up so much so fast, if they drop interest rates at all and prices are not going to go down. You drop interest rates, prices are going to go up because now I can afford to buy more house. So there won't be a correction in that sense of the word.
Okay.
What the correction is going to be is on commercial real estate side. Office buildings, multifamily, industrial, there'll be a correction on there. But residential, people buying a house to live in or for an investment property, there's not going to be a correction there. Rates will drop, prices are going to go up. So what you are waiting for in terms of I can buy more house when the interest rates come down, that's based on the fact that the price of the house didn't change.
Right.
So if I was buying a $500,000 house and the interest rate was 7%, that's whatever my payment is my payment. Interest rates come down to 5.5%. That $500,000 house is now worth $700,000. So my payment's going to be about the same anyway.
Right.
But I waited 2 years to pay $200,000 more. That's a bad deal. I should buy it. I should have been bought it already or buy it before rates drop. Weather the storm, it's going to be a little tight. I'm not going to have as much cash flow, but when the rates do move, if they do move, I'm going to have some equity. Now you can sell it, you can refinance, you can do whatever you want to do because the biggest part about real estate is you have to own it to control it. If you don't control it, you don't own it. I don't care what's going on, it's not going to help you.
Powerful. What else did I want to ask you? So what's next for you as far as like the book? Like talk to us about how you're rolling out the promo for the book.
So this is the first of hopefully many podcasts that I'm going to be doing, but this is the beginning of my book tour. So I'm going to be very intentional about how I promote the book. I'm going to do some specials with the book, but the book it's an entry point for a lot of people into who I am as a person and into my ecosystem. As you mentioned, I do a lot of things, right? I do real estate investing. I can teach you how to do real estate. I can do insurance. I have an insurance brokerage. But at the base core, I'm an educator. I want to educate you about your personal finance, and then how do you use that foundation to build the life you want to live. You should be wealthy. I believe everyone should be wealthy. What that looks like for you is an individual conversation. But I want to give you all of the tools and pieces to be able to do that thing you want to do. That's it. If you want to be an artist and just make art for the rest of your life, that's great. But you should have some type of income coming in to support that lifestyle. Or you want to be the biggest real estate investor on the planet, that's great. But I'm going to show you how you get to that point, right? We're not given all of the tools. That people are constantly selling stuff to us, but they're not. I think that selling recklessly is a bad thing. I need to give you information that you can actionably use and still protects you along the way.
Do you believe everybody should own a piece of real estate?
No. Everyone should not own a piece of real estate. Everyone should not be an entrepreneur. Everyone should be an investor in some way, shape, or form. Investment allows you wealth and equity in America. If you don't invest, you will forever be dependent on people that do invest. So figure out where you're comfortable and start there.
Got it.
So do you think you found your purpose?
I will see. I don't know. I haven't got enough feedback from everybody yet. I don't know how the book does. I don't know if people are learning. So for me, success isn't necessarily a dollar amount. I could have made a bunch of money and not told anybody anything. I don't think that would have fulfilled me in like life, right? That's why I told you guys about how much money I was making when I did or did not take a job. It wasn't for the money.
It wasn't for the money.
I was trying to learn something so that I could hopefully use that information for my son, which is another reason why I wrote the book. Right. If I'm not here for whatever reason, can he pick up the book and learn something from me?
So you have an interesting mindset because the average person is like, well, let's say, for example, how I grew up in my household. They were like, look, either you're going to be a doctor or a lawyer. I chose none.
Right.
So it's like, because the mindset of the average person in America is like, I need to chase that money.
I mean, yeah, we need money.
You need money.
We got to make money.
But then as an investor, you need money to invest. You need some kind of, it has to be coming from somewhere.
Yeah.
But to change that mindset of a person, it takes some real deep, like it's from generations.
It is. It's behavioral.
It's behavioral.
And that's the part that I'm fighting against in the financial services space. That's why insurance for our community is so difficult to give. Because they don't see the value emotionally, one, and then two, financially. They don't see where it comes back to them. Most people are, no fault of anyone's, inherently selfish.
Explain.
When I ask most people about life insurance, there's two direct comments. One, I don't need it, or it's too expensive. But who says that are two different types of people. Sorry, it's not one. It's one, I don't need it, or how much is it? Those are the two things. The person that says I don't need it thinks about only themselves, because I can't benefit from the money with the life insurance, which is not a true statement. It's just, well, you were probably told about the wrong product. The person that says how much is it is normally someone who is caring about another person, a parent, a grandparent, a guardian, a spouse, because they realize that there's someone else outside of me that's going to benefit from this thing. That's just the foundational conversation around the behavior of it. And then the next step is the educational piece. Well, if you told me you don't need it, then I would say to you, you'd never need money then. And you're like, what are you talking about? Because you need money.
Right.
But you thought that life insurance means you don't have access to the money. And I can show you how you have access to it. And I can show the person that says, how much is it, how you can still have access and protect the person you're trying to protect.
Powerful.
There's no reason you don't have life insurance at some level, just in general.
We're gonna open up for questions. Does anybody here have any questions for Andre as we're recording? Okay, we'll just give you the mic.
Hi, Andre.
Hi.
Give you the mic. Just speak it to the mic. Yeah, that's for the podcast. Yeah.
I just wanted to just touch back on the 401k that you spoke about, and if you could give just a little more insight on how someone, let's say, has been a city worker, and you're right, we don't have access to 401k. You know, I know they've opened it up to say, all right, you do have the option to say how you want your money, placed based on your age and retirement, but how can you get more information just from your standpoint of view as city workers? Just
More information from your job? Or more
from your job and the 401k. Like, as you said, I don't know who has my 401k. I don't know. I'm not even with the city anymore, but my money's still there. So how could you speak more to that piece? Like, how could I be someone that could be more involved in getting that money out or getting more information about
Great
it?
question. So first and foremost, I would say have a consultation with me because I can move 401k money. So I can help you set up, so depending on your job and what the retirement account is, I can help you set up an alternative. It's not an alternative, it's another account for your 401k to move the money to. Because what you don't want to do is, a 401k is a qualified account. You don't want to move from a qualified account to a non-qualified account. That will trigger the penalty and tax. So you don't want to do that. You want to move from a qualified account to another qualified account. But the second qualified account, you get to dictate how it's distributed. How much money goes here, how much money goes here. You can do self-directed IRAs, self-directed 401ks, or you can put it with one of the big boys at Vanguard or whoever, Lincoln Financial. There's a bunch of companies, Mass Mutual. There's a bunch of companies that you can move money to, and you get to control where it goes and how it's moved around. So nothing changes in the sense that it's still a retirement account. You still got to wait till you're 59 and a half. You still got to do distributions or all that stuff, but you're in control of when that happens and how much is going where and how your portfolio is kind of set up. So that's if you wanted to do it outside of the job. If the money's still in your job and you still work there, I would tell you to reach out to your HR person and get them to have them put you in contact with the person that's managing the fund for your job. They've got to answer your questions. It's your money. So they got to tell you, well, this is my allocation. If I'm uncomfortable with this, what can I do? You have to know the right questions to ask, right? And one of the things that I do on a bi-weekly call that I have now is I do a webinar. It's called the Family Meeting Series, right? Mm-hmm. So it's every other Tuesday, every month. We have conversations and topics around personal finance. So we talk about credit. We talk about 401ks already. We talked about taxes last week. We're talking about real estate investing on February 11th. We're going to cover 529s. We're going to cover actual passive investments. We're going to talk about buying cars. We're talking about credit for cars. We're going to talk about all of the things that we as a family should have been talking about when we were growing up. Mm-hmm. That's why it's called the family meeting, right? It's a place for you to go and learn about your finances. That the safest place to learn about anything is normally at home, normally. Mm-hmm. So I'm creating that space online, virtually, so anyone from anywhere can come and learn about the basics, first and foremost, about how your money works, how to manage it, the behavior of your relationship to money, because that's the biggest piece, and that's the hardest part. If I can get you to shift how you think about money and how you use the money, everything else becomes easy.
Mm-hmm. Powerful. Anybody else? Questions?
I kind of, if everyone's good?
Go ahead, Rob.
Yeah. I kind of wanted you to touch base as far as when it comes to life insurance with your job.
Okay, great question. Mm-hmm. So life insurance at work is a topic that comes up in most conversations because I'm talking about life insurance with people. If I ask you the question, do I have enough life insurance from my job? What is your answer? I'm going to just use you because you sit here.
No.
Why is it not enough?
I guess I chose it that way, or?
No, I don't.
Well,
you
not
don't choose.
chosen. Well, not chosen, but
They don't care.
They don't. It's,
That goes all the way left.
yeah,
went all the way
they don't
left.
care. You
Don't
said
get me started.
What was that? You said they don't care.
He said they don't care.
Yeah, they probably don't. But yeah, it's that's
This is how it's set up.
That's just how it's set up.
It's just how it's set up.
Right.
So normally your job gives you life insurance as an option with your paycheck, right?
Correct.
You get to choose an election you get to make.
Right.
And normally they do 1.5 times your salary for the amount of death benefit you're going to receive.
Mm-hmm.
So if you make $100,000 a year, 1.5 times that is $150, right? So if you pass away, your family, your beneficiary will receive $150,000. Now, depending on how old you are, how old your spouse is, if you have a spouse, how old your kids are, or if you have small kids that you care about, that $150,000 will technically replace a 1.5 years worth of your salary plus some, because it's tax-free. Your job isn't necessarily doing that for your own benefit alone. Because when you own the life insurance, you get to dictate how much goes where. Mm-hmm. So your job gives you an option to participate in the life insurance, but is the $150 the full amount of the death benefit?
No.
Well, we're gonna say we don't know.
We don't know.
We don't know. Mm-hmm. So my job's paying for something for me, and I can ask the group, right? How many times has your job given you something for free?
Never.
Right? They're getting something from the money that they're paying into.
Right.
Sure.
So they pay you because you're supposed to do a job. They're putting money into your 401k because they get a write-off. They're putting money into life insurance because if you do pass away and you still work there, they're going to get some of that money back because they're also on the policy. So there's a benefit to them to give you benefits. They do not give you benefits for free. You pay for health insurance. They get a deduction. 401k, they do a match. They get a deduction. Life insurance, they get a deduction. And I'm not going to get into the whole conversation about what happens when we start talking about a whole life policy and who controls all of the money that's in it at your job. That's a whole nother conversation.
Wow.
Because if I give you guys the example of the bank, regular bank, Chase, Wells Fargo, Bank of America, whoever, a lot of banks use life insurance as a place to store and invest money. Mm-hmm. They do it through insurance. But the only way that they can do that is by, you ever notice that at a bank, most of the physical bank employees have multiple titles? Mm-hmm. Like branch manager, executive vice president, right? They have 2 titles.
Right.
And it doesn't make it, like, how are you an executive vice president of a bank and you work here with me?
Right.
It don't make any sense. Mm-hmm. In order for the bank to put a bigger life insurance policy on an employee, you have to have an officer's title. Executive vice president of trash bags is an executive title inside of the bank. The person's an actual branch manager. That's their title, their day-to-day job. But they get an executive VP or assistant VP or director's position. They have to have an executive title to qualify for the bigger life insurance policy, a whole life policy. Now, you're paying $5 a paycheck, $20 a month, whatever that number is. Your job, I'm talking about the bank for this conversation, the bank can now put in, for example, they're going to take Glad, who's a branch manager, who's an executive director at the bank, title-wise, and we're going to get a life insurance policy on Glad. If Glad's regular salary is $100,000, if something happens to him, we got to replace him. But if nothing happens to him, he's just going to work. Mm-hmm. So we have the option now because we're going to use a whole life policy. It's called BOLI in banking terms. Mm-hmm. It's bank-owned life insurance. His income's $100,000 plus his benefits. They had all of that stuff up together. Let's say they're paying him $200,000 altogether out the door. There's an actual number that they can use to calculate how much insurance they can put on him. So let's just say the $200,000 turns into $1 million. Mm-hmm. We got to take $200,000 to replace him. We got to give him another $150 for his death benefit. So that's $350 out the door. That leaves $650 left over in cash value in the policy, in death benefit, right?
Wow.
That's if he dies. But what if he doesn't die? Glad's a healthy guy. He works out. He's doing a 5K with the job. Everything's great. So now we've got a bunch of extra money that we can put into this life insurance policy. This is the infinite banking concept. And I went through it with you guys, so now this is going to make a lot of sense to y'all. When you have the minimum amount you're supposed to pay, which is, let's just say, $20,000 a year. The maximum that you can jump into that policy is $100,000, right? So that the difference between 120 is $80,000 that they can put into a policy for GLAD, but it's owned by the bank. Can he ever tell them he needs to borrow money from that policy? No, they're gonna tell him to borrow from your 401k. Or you should have been saving money. What are you doing?
Right.
But they've been dumping money into this policy. So if you ever wanted to do it for a fun exercise, Google BOLI, it's bank-owned life insurance. There's a list that's going to come up on Google, and it's a federal list that shows you how much money banks put into life insurance. They put billions of dollars with a B into bank-owned life insurance, and it's on the bank and all of its executive employees. So that when they need to lend you money for a house or a car or a personal loan or a debt consolidation, they can borrow money from themselves to give it to you. On top of the fact that it's fractional lending, so they can borrow money from the government and everybody else. They've got a ton of access to a ton of money. So what do they end up doing is they take all this money that's been growing in there, they give it to the insurance company. The insurance company says, we're going to give you a set amount of interest on your money, and then they go buy. They do investments. They lend money to, big companies, big developments. That's how they make money on your money, but they're doing it through insurance on you. And now I'm telling people to go do this for yourself too.
And we don't even know that this is happening.
No idea. I didn't know.
Wow.
So yeah, I'm just thinking about it like, wow. So if you really sit back and really open your eyes and see exactly what's going on the back end, you'll understand that pretty much everything we do, it's a business.
It is a business. When I learned that college was a business, I was kind of hurt.
Yeah.
Damn, that's crazy.
Because the life insurance, it's like they're banking on you to die. I mean,
They're
when
not.
it comes, well, they're not
They're
banking.
not.
They're not, but they're making money off of
While you're
like the whole employee.
So that's not the life insurance company. That's the bank.
Okay.
The bank's making money off. So life insurance, you're paying for life insurance, right? So you
Right.
pay a premium for the actual life insurance. But life insurance is the only thing that you will ever pay for. That from day one, you're getting 6 to 10 times the amount of return. So if I'm paying $40 for $1 million life insurance policy, if I die the next day, my beneficiary gets $1 million. There's nowhere else that's going to happen. So people equate the amount of insurance that you're paying out of pocket. All they see is what they're paying. They're not looking at, well, what does that get me, right? So if I'm paying $600 a month for $300,000 in life insurance, apples to apples, you're not doing that nowhere else. But it's like, well, what happens to my money if I die? The insurance company pays out $300,000. That's what happens. How long do you need to pay $600 a month to equal $300,000? That's the question you should be asking yourself. Because now you're saving money to do that. So you want to self-insure. I want to save $600 a month, and then my goal is $300,000. All you gotta do is divide $300,000 divided by 600, and that's gonna tell you how many months it will take you to get there. I'm gonna bet you right now it's a lot of months. I'm not gonna do the math. I don't want to embarrass myself.
Man, any more questions from the audience before we say goodbye? You got a question? Go ahead. We're gonna give you a mic real quick. Yeah, just so you can speak it to the.
Question I have is with the life insurance, right? When the company takes out the life insurance on the employee, if the employee happens to die,
Yes.
does the employee family get compensated for? Do they get any of that life insurance money?
Well, normally yes, because it has to have the life insurance policy has to be in benefit of the person that's it's insured on. So you as a business owner, you own the policy, but the insurance is on the person in the company that's working for you. So yes, that's why they tell you get 1.5 times your income. They have to get something for it to
Gotcha.
be legal. But if it's $1 million policy and you as a person paying for it says, I want to give you 1.5 times your salary, you pay the employee $100,000, I'm going to pay out your family $150,000. The insurance amount was $1 million. I'm just telling you that you're going to get $150,000. I'm paying for it. This is like when your mom used to take you to the store and like, oh, I want this toy. That toy is $20. Oh, I want this toy. It's $8. I'm paying for it. You get a $20 toy. I get to dictate to you what you're gonna get because I'm the one paying for it.
Thank you.
No problem.
Powerful, bro.
The job market is crazy, bro.
We've learned so much today, especially using life insurance to invest in real estate. I feel like there's just so much more that we can learn. Before you get out of here, let people know where they can find you.
If you're looking for the book, you can go to longdistancemillionaire.com. All of my personal handles are Andre_talks_green on Instagram, YouTube, TikTok, LinkedIn, everywhere. It's the same handle everywhere. I'm asking for my community to support me by going to the YouTube page, subscribing to the page, going to the website to buy the book. And if you wanted to ever book a consultation with me to talk about retirement, talk about insurance, talk about personal investing, or just business consulting, you can go to AndreTalksGreen.com.
Perfect.
Wow. No, that's beautiful, man.
We appreciate you, man.
Definitely
Episode
appreciate you.
50. I feel like this episode was. You doubled down on this episode, bro. Too long, man.
It's a lot, man. It's a lot.
Rob, housekeeping items.
Housekeeping items. Team Sock Passe, Team Sock Passe on all platforms, on all social, on YouTube, Team Sock Passe. Also, we want to thank you to our sponsors as well. Roots for Brooklyn, Sweets 100. We also have like
Team Transformation.
teamtransformation.com as well.
Hopefully, Andre Talks Green pretty soon.
Yeah, Andre Talks
Yes,
Green.
absolutely.
We say thank you again. Remember, Team Sock Passe. You all know what Sock Passe means?
They should.
No, some. Well, Sock Passe means what's up in Haitian Creole. So, Andre, thank you so much, man. We appreciate you.
A round of applause for our
Round of
brother.
applause.
Thank you, guys. Thank you.
Awesome.
Thank you.
Yeah.
Thank you.
Team Sock Passe, we
out.
out.
Thanks,
All
guys.
right.